Welcome to AHA Math and Science. In today's video, we'd like to revisit a discussion that we had about the path to the bottom of this bear market. That was done a few weeks ago. So we like to revisit this discussion, and given that some new information just kind of we had, since the last discussion. In the last video, we talked about that one possible scenario is that the market will continue to march higher and then get to the 40 level. That was kind of the right shoulder here. This is kind of the head shoulder pattern here. And then recession will hit sometime late this year, and that's when the market started kind of drop again. So this is one possible scenario and it seems like very reasonable. But we also discussed that the level that you can get to, perhaps that is around the 3250, and because that level is actually where some support is here, and that's also kind of the top of the February 2020 high, just kind of before the bear market due to the pandemic. So, but we noted that 2024 is an election year. So sometimes the market gets affected by really this obviously a very important event in every 4 years. So we took a look at the statistics for the market performance during the election years. Well, during all these years from 1926 to 2022, 71 of these 97 years, or about 73%, during these years, the market was positive, with average return of 12%. But during the election years, marked by these arrows, these are the years when the market was green, and then you also have these years where the market actually had a negative performance. So the statistics says during these election years, 20 out of 24 years, or 83% were positive, with an average return of 11.6. So the average return is very comparable, but you can see the probability of the performance is positive. Actually, you can see there's slightly sort of edge, for the election years, 83% versus 73%. So what could this mean? Well, it could mean that the recession that we've been anticipating may not actually happen in late 2023. Instead, it may be pushed back, towards the end of the 2024. If that's the case, then we suspect the market may experience some kind of correction or larger pullbacks, and then will continue much high until it hits the 5,000 level. And that's when the recession hits, and then it's going to come back down. So that's another scenario that we think is also possible, given that we're just kind of the year is just kind of overlapping with the election. So we like to actually revisit this kind of scenario in a little bit more detail, and can also discuss from another perspective. See if this kind of scenario, if plays out, what's the likelihood? So just recently, if you actually pay attention to the AAII sentiment survey, which is conducted by the American Association of Individual Investors. So this survey, actually just the data came out last week. You can see that it was very interesting because in the prior week, May 31st, the week ending May 31st, the bullish sentiment is still kind of low. It's hovering below 30%. But then just a few days ago, for the week ending on June 7th, the bullish sentiment actually increased to 44.5%. And at the same time, the bearish sentiment dropped from 36.8% to 24.3%. So that's very interesting. This is really kind of like, as you can see, that this puts the optimism above its historic average of 37.5% for the first time since February 2023. So now we actually want to take a look at the chart, and then see what's really going on. So over the past actually few months, you can see that the average sort of bullish sentiment This lag curve is a 20-week average of this bullish sentiment data from AAII. You can see the level is very low, below. It's around like 25% bullish, sentiment. This kind of low level of sentiment, a bullish sentiment, is comparable to what actually we have seen in basically 1988, 1989, and then also in early 1991. Very low sort of bullish sentiment. But as we just point out, we just had the sentiment, just kind of increase sharply to above 40% for the first time since like almost a year. So that's this data here. And this seems to be just kind of corroborate with the data we actually see here during this very low sentiment period. You can see this is the first time the sentiment started to increase above 40%. That happened in February 1989. So let's take a look how the SP 500 performed around this period, during this 1988, 1989 period, when the investment sentiment was very bearish and just kind of started to turn bullish. And you can see, once it turned bullish, this bullish trend is going to continue for quite a while. So this is the chart for SP 500 during this period from 1987 to early 1990s. And you can see that in 1987, from August to October, we had a bear market. The SP 500 dropped about 36% in less than 2 months. And then the market is going to start this long journey of recovery. By February 8, 9, so during these times, the investment sentiment is still very bearish. But then around here, the sentiment started kind of turn bullish. For the first time, it increased more than over 40%, the bullish sentiment. And that time also the market already kind of recouped about more than 50% of the ground it lost during this bear market. So it seems kind of very similar to what we are having now, because just according to the headline news, the SP 500 just kind of entered into a bullish a bull market because it already increased more than 20% from the low, and also the sentiment started kind of also turn bullish at the present time. So this is really kind of interesting. But note that, and this bearish sentiment, it's not like totally baseless. In fact, from February 1989 to July 1990, in about like 17 months, in a delay of 17 months, you can see that the recession started to hit. So in other words, investors' worry is actually really kind of like has some basis, and they're worried about a recession is coming, but the timing sometimes can be actually quite off. So it took like about 17 months of delay eventually for the recession to materialize. And then here, that's when the market dropped again. But during this worrying period, the market continued to much high, even actually made a new all-time high. So this is something very interesting, and we want to actually pay attention to this. So now fast forward to the present time. So since the top of this bear market, which is January 2022, the market dropped about 27.5% in a little over 9 months. That's when actually the market kind of bottomed in October 2022. Now, since then, it's kind of in this recovery period, and we just kind of, according to the headline news, we are just kind of in this new sort of bull market. Technically, basically, it means increase more than 20% from this low here. But the interesting thing is obviously the bullish sentiment just started increase, after this, like almost from October to now June. That's almost like 8 months. And now the sentiment started to turn slightly more bullish. And so if the election year sort of statistics start to kind of play, and then we suspect the recession maybe push it back to the very end of 2024. And guess what? If that's the case, you can see like from where the investor sentiment started just turned bullish to this time is exactly also about 17 months. Just very similar to what we actually saw in the 1988, 1989 case. So this really kind of, both the sentiment and then this recession and all this timing start kind of seem like similar to the 1988, 1989 case. So and therefore it's a real possibility that the market could have continued much higher until actually the recession hits, and even just like what happened in 1988, 1989 case, it will actually make a new all-time high before it starts to come back down again. So our suspicion is that it may actually march high all the way to 5,000 along the way. We suddenly will see the pullbacks, corrections, for example, around this level, 45.40, which hits the right shoulder. It may come down a little bit with a 7% pullback, or maybe a somewhat around there. So maybe a small pullback, but it will, the general trend, it could be that actually marching all the way high, or to an all-time high, which is above the 4,800 level that we see at the beginning of 2022. So this is a real possibility. And after that, obviously, the recession hits, and then the market will make a low. And obviously, at that time, we have to reassess what's going to happen. And it's still too early to call what level you will hit eventually. So a lot of interesting information, and make a comparison, and especially the invest sentiment, really kind of interesting data that we want to actually keep an eye on. And so I hope you have enjoyed this video and find the information present here interesting. Again, your support really means a lot to this channel. So please do not forget to click the like button, and also to to subscribe to our channel. And there's a lot of question marks we want to answer, and we want to discuss with you guys. And feel free to leave your comments below. And again, thanks a lot for watching, and good luck and with your trading.